E-mini S&Ps end the week higher after earlier this week trading lower. We spent much of the earlier part of the week trading below 3,800, only to end the week north of 3,900. So a bit of a tale of two different stories here. Midweek, we did get the FOMC minutes, which talked about the Fed wanting to fight inflation as opposed to being fearful of a recession. And today we saw much stronger non-farm payroll numbers. So clearly jobs aren't the problem. We'll have to let the Fed deal with inflation with their rate hike cycle, which will continue in July. Expecting us another 75 basis point rate hike at the end of this month, but equities aren't fearful of that, at least not yet, as we did see a dip earlier in this week on fears of a recession, and then fears started to cool. We started to see equities come off as treasury yields started to rally again, but ultimately ending the week back above 3,900. Now, what does this mean for volatility? Well, the VIX index has remained eerily low, not seeing a whole lot of upside action there, and today we ended the week back below 25. First time since June 9th, we've seen a print below 25 in the VIX index. So again, volatility, not really seeing much upside. And then as soon as things start looking good again, we start to see VIX index come off, volatility going lower as equities rise. That's typically what we're used to seeing. Lastly, let's talk about what's coming up next week. We got a bunch of numbers the Fed will be watching very closely. CPI, PPI, and retail sales. The CPI one being the biggest. Obviously, that's the inflation component that they'll be watching. Inflation remains elevated no matter how you slice it, and the Fed wants to bring that down. They're going to continue to raise rates to do that. PPI may or may not confirm that. And then we get the retail sales number, which could bring in some positivity if we do see it move higher. Obviously, the economy on very shaky ground here as we continue to watch those GDP Now numbers out of the Atlanta Fed. While they are continuing to remain negative, they are slightly less negative than we were earlier this week. So we end the week with slightly negative GDP expectations as to really negative GDP expectations. I don't know if that's positive or not, but at least it's moving in the right direction. We also will get the onset of earnings season. And when I say that, I'm talking about the banks. The banks will set the tone for Wall Street. We'll start to get some of the big bank earnings, how they come in. Expectations are very high, so it'll be interesting to see if they can meet those expectations and continue this bull market that we've seen over the last couple of days. So even the S&Ps, after spending much of the early part of the week down south of 3,800, end the week north of 3,900, ahead of CPI, PPI retail sales, and bank earnings.